Launching in 2015, the 757 Angels set out to fund startups in the 757. 6 years in and $70+ million of capital infused into 28 companies. There are more dollars being invested in the 757 than probably ever before. Welcome to the Fervent Four. Did you know that only 4% of businesses ever cross the annual $1 million revenue mark? Hello, I'm Zack Miller, author of Anomaly. With me today, I have my co-host, as always, Tim Ryan, lead man at StartWheel.org. Thank you so much for joining us. The Fervent Four is a weekly show each and every Thursday at 11 a.m. dedicated to sharing insights into growing a world-class business no matter the climate. I read that every week. I wonder if I can memorize that. For decades, many said the problem with Hampton Roads, the Hampton Roads business community, is the lack of capital available for startups. Is that still the case? Or can the area check that one off the list? Fervent Four Nation, it's time to chat with the magical and powerful Daniel Byler Clark. Ladies and gentlemen, here it is. What's happening?
What's up, Daniel?
Hey, how are you guys?
Wonderful. Is that a leather jacket?
It is. It is.
So you're freezing.
I am. There. So I feel like my house can only get up to about 67 degrees. So constantly wearing jackets.
There you go. I think we're all wearing jackets of some sort today. Hey, you know, it's chilly outside, and sometimes you got to do that. So you grew up in this area, took a little boomerang ride to the West Coast for a little bit. When you graduated from Old Dominion University in what, 2015? Is that right?
2015.
And you went out there. You did the whole venture across America. You took your 4Runner and you drove across that. What was it like driving across the country?
Oh man, it's the worst thing in the world. So I think I've done it about 5 times now.
Oh, wow.
Funny enough, I've decided to move back and forth from LA at different points, just timing wise. And the drive takes about a week, maybe 2 weeks, depending on how fast you do it. Obviously, you can go straight through and probably do it in 3 days. But it's, I think, 40+ hours. And for me, that is the worst thing in the world. I never enjoyed it. Always loved seeing the new states, but never enjoyed the 8-hour+ day drives.
Did you go different routes every time just to change things up, or? Yeah,
there's about 2 routes, one north, one south, that pretty much get you directly to LA. And so we've done both multiple times. Both are fun, but both are long.
What was your favorite state that you didn't expect to even be your favorite? Like what?
So I think my favorite spot would be Sedona that we ever stopped in, and I actually wanted to stay multiple days. But state specifically, honestly, I'm not quite sure on that. I think Sedona might have just been my favorite place.
Yeah, that works. Cool.
Okay, so you get to LA, you play there for a little bit, you work your way up, you do an internship at an ad agency, I believe, and then you kept applying to different jobs, and you got a job at Uber for a little bit. Is that
right? So yeah, I got the internship, locked that down just to kind of fill that gap in terms of finding a job. But man, finding a job out there was really difficult. Took me 6+ months to actually lock down solid interviews. And then once I actually got in the door at Uber, it was about a 3-month process throughout the interview.
This is not driving.
I came back home in between that. But yeah, it was an amazing opportunity. It just takes so long to actually progress there.
What's your degree?
What'd you do with Uber?
So I was on the EOps team, event operations. So we were set out to redesign how Uber works specifically for events and venues. So one of the most fun teams, I think, at Uber at the time, because we were kind of a startup within a startup. We were a new team that was formed just because they found that quickly Uber broke events. So say Coachella with 120,000+ people, 40,000+ people are going to be taking Ubers in and out, and Uber essentially just crashed at the time. And so they built this team to really figure out how it would work for events and venues. Now you kind of see some of the work we've done at like LAX, where there's a PIN code process that is what we kind of implemented and tested at these events and venues, as well as we kind of built out this entire huge operation on site there and run it. And it is I don't know if you've had the opportunity to go to Coachella, but if you do, let me know how that process goes, because it was extremely fun, but also extremely intense.
With that said, what is the whole, with surge pricing? Was it your goal to eliminate the need for surge pricing? Yeah, and what's Uber's take on that? Because wouldn't Uber make more money with surge pricing as well as the driver?
Right. So surge pricing was definitely a huge pain point, but also, highly involved in that process. Surge pricing was still a thing. So as you can imagine, a typical ride from that parking lot, essentially, that we're operating out of, which is a huge football size field, the surge pricing went from a ride being $20 to being close to like $200 at the egress point, the main egress point of the event. So it did heighten, and that was something we had to look at in terms of how that algorithm worked for events and venues, just because it's under the most extreme constraints, but it definitely was involved.
Well, I can think of just being at airports in general and thinking of just the challenge of dozens of people trying to get an Uber there or a taxi there, and how they, over the years, that challenge moved and I think got fixed a little bit. But then to think about something like a Coachella, I mean, how many people go to a Coachella? 50,000 people, something like that? I mean,
no, it was 120,000 plus.
Yeah. I mean, I know it was whenever Taylor Swift was in town a few years ago, a friend of mine was telling a story.
Where? Taylor Swift in town, where?
FedEx Field, when she played FedEx Field.
I was going to say, Taylor Swift.
Yeah.
Never.
He was talking about his story trying to get his Uber, and he said it was just a nightmare.
Yeah. Well, they'd also, the Metro, is it called the Metro there? It does not go there either,
right.
Which is always interesting to me. Atlanta's the same way. It's always interesting to me when like major cities, I think Atlanta's the same as that, when major cities, metros, mass transportations don't go to their place where they're going to have a lot of people. I always find that to be.
Yeah, it was really crazy with the whole Taylor Swift thing. So like the option was you could pay a ridiculous amount to park. You could Metro in, but you would have to leave the concert early in order to catch the last train out, or you could, whatever surge pricing was at the time, to Uber in and out.
Yeah.
So Daniel, if you are like in an elevator with someone and they ask the worst question in the world, which is like, what do you do for a living type of thing? Let me ask you it a different way. Like, what are you best at? Like, what if you were to say like a word or two, like marketing professional or user experience, whatever type of thing, or, awesome jacket wear type of dude, what would you say in like a handful of words is what you're best at business wise?
So I think what I'm most passionate about, which I think would be in line with what I want to be the best at, would be the due diligence side of things, and really breaking down business models with entrepreneurs. I love talking to entrepreneurs. I think that is where my golden sweet spot is in terms of what I want to do with my life moving forward, being a mentor, getting more involved personally, and investing into these companies. And so I think that due diligence side is actually what I want to be the best at. Obviously, I've only been doing this for a little bit less than a year now. So I think I definitely have a lot of work to go. I think a lot of angel investors would say that, talk to me in 10 years after I can actually see some of the fruition from my investments to let you know if I'm actually good at what I do. But yeah, so I think that's my sweet spot.
So is due diligence the same as analytical, if you will?
So I think on the West Coast versus East Coast, you get into, how they do due diligence a little bit differently, especially just in terms of investing. On the West Coast, I found out that a lot of people had a ton of money that they just wanted to get working. And so they found founders they were excited about, ideas they liked, and then just threw money at it. I think on the East Coast, it seems to be more that they dive a little bit deeper. And so definitely analytical. But with companies that are this early, I think a lot of people say this, but it's more of an art than a science. So you kind of have to break down into, do you trust what these founders are saying? Do you trust them? Do you believe in what they're doing? Do you believe that they can address the concerns that you have?
Tim? What's your first impression? So you started with 757 Angels. You hit your toe in the water. What's your first impression on the landscape of our ecosystem, if you will?
Yeah. So I mean, obviously, when I left 5+ years ago, 6 years ago now, I didn't really see an ecosystem around here, and that's why I jumped in the car and kind of ventured out to Los Angeles to just kind of be a part of the startup community in some sort of sense. I had the opportunity after I got my master's at Pepperdine to move back here during pandemic when I was traveling a little bit and kind of enjoying life before I stepped into my new gig. And I was very excited about the progress that I saw because, it didn't really seem like we had anything going on at that time or anything I was aware of. And so when I reached out to Monique and reached out to 757 Angels and kind of dug a little bit deeper into what has been happening and how much progress they have made thus far, and even the entire ecosystem here with StartWheel and everything you guys are doing. I've just been super excited constantly over the past 6 months and just moving deeper into the understanding of this ecosystem, and everything is just, keeping me on that excited, and, I'm really happy that I'm here.
You're muted, Zach.
It hasn't been a long time. 2015 to 2020, 2021. It's not a lot of time. So is it just that? And how old are you actually? It might be
28.
Okay, so 28. So
29.
So you're 23-ish, 22, 23-ish. Do you think that you just didn't know what to look for in 2015 from the ecosystem? And has something actually changed in that time frame? You said progress. From the startup community there, I feel like when I started pushing kind of some of this stuff in 2011, 2010, 2012 timeframe, there was definitely nothing there. Is it just because you needed more time to really know what to look for? Has something actually changed? As a due diligence guy, I think it's important for me to ask you due diligence questions what are you finding that actually was different from a 2015 timeframe to the last 18 months or so?
Right. Yeah, I think it's probably twofold. So I think I didn't really know what to look for when I was leaving ODU. And I just knew the opportunities that were kind of in front of me or looked attractive were probably in LA or not even really Austin at that time, but LA or San Francisco. I loved LA for the entertainment side as well. So locally, I probably wasn't looking in the right areas to find it. But then when I moved back, I have dug a little bit deeper into what we've done over the past 5-6 years since they opened in 2015 with the Angels. And so obviously the amount of capital that they've actually been able to dump into the ecosystem locally, and most of that $70+ million actually is in Hampton Roads, a lot of it with follow-on. But the companies, located here, assemblies opening, what Drew's been able to do locally in Norfolk. Obviously, I'm a Virginia Beach kid, but now living in Norfolk. I've just been really excited, even with the Vibe District and down at the oceanfront, seeing some of these small businesses that are really creative open up. I've just been really excited to see all of that progress moving back. And maybe it's just more, something that I'm looking at now versus what I was kind of running away from at that time. But for whatever it's worth, I'm just super excited to be home and super excited to be a part of growing that ecosystem here now.
Yeah, it's super cool that you're on the show, and this is a great opportunity for folks that are trying to raise capital, certainly within 757, to hear from you firsthand and from the guy doing the due diligence for folks that are putting their packages forward. If you had to, what's the top 1, 2, or 3 things as you're looking at people submitting their applications for 757 Angels that the box that the one you look for and the most common box that they don't check? Is it monthly reoccurring revenue? What's your take?
Yeah, obviously, I think Depending on the company, each industry is different in terms of if we're really looking at revenue. Obviously, we do invest in pre-revenue companies. So I don't think revenue is necessarily a big box that I look at. I'm looking at the founders. Have they done their homework in terms of what we're looking for? Have they done their homework in terms of financing? Sometimes when terms are thrown at us and it looks like they're giving up 70% of their company in one round. Obviously, they haven't done enough homework to kind of figure out what they should be asking for and what those terms should look like. So that kind of throws me off. So I kind of look at an entire package. I'm very founder focused in terms of just personally what I'm looking at. So I'm very founder focused. I want to see that they're passionate, that they understand the industry, that they understand where they fit in the market. I want to see some traction from the company and whatever that may look like. That doesn't necessarily have to look like revenues, but if that can look like you've done beta testing and you have conversions, even if you have a freemium model, something like that. So I do look for that traction. Revenues definitely aren't, a top priority, but I'm very founder focused personally. That might not speak to 100%. Obviously, my better half on the team, Monique Adams, she might have a little bit of a different focus, 100%, but I think that's where we kind of balance each other out, because most of these calls we're actually doing together, and I take notes, she takes notes on similar questions, and then we come back with two different scorecards and they kind of balance each other out. And then we have long calls afterwards to kind of talk about where we're ranking all of the companies. So I think that's where we have an amazing dynamic.
I'm going to spitfire some questions so the viewers can understand some of the lingo that we're talking about. Oh, yeah. So quicker answers to the questions. What is an angel? What is an angel investor type of thing?
Right. So an accredited investor is someone generally that has a high net worth or is able to be a mentor. Obviously, now they've opened up those regulations to allow people that are just knowledgeable in the area with different financial licenses. But those people just want to invest and allow capital to be available for founders and startups locally, at least with our group. Obviously, angels can invest nationwide.
Okay, so then a series of questions, just going deeper. What is 757 Angels then?
757 Angels, we are a group and not a fund. So we're a group of 130 plus angels, and we're really building that ecosystem locally. We have a Virginia-based ethos, and we invest in Virginia-based companies.
And if I remember correctly, the 757 Angels doesn't actually even collectively invest as a group. Even opposite of the fund part of that is it is a collection of individuals, like you just said, and then of that, they see performances from companies who get their packages out there to then, or their companies to get out there to then be funded. And then from there, a group of those that are in the stands, if you will, decide and invest in those companies. Is that still the way it's running?
Right. So all of our angels have the opportunity, but not any sort of requirement to invest into the companies that we provide for them. I'm really more of an investment curator. And then the board does the deeper dive due diligence. We allow 3 companies at the end to pitch to our entire group. And then our 130 plus members have the opportunity to invest, but there is no set requirement for them to invest in those companies.
Okay, but not as a group, 757 Angels, right? Individuals. Okay, still a
individual opportunity.
Got it. What is the sweet spot of the investments for 757 Angels?
Yeah, so obviously, like you said, they have the individual opportunity. So I think it looks different from each angel. If you were able to kind of see internally and kind of track their performance and what they invest into, I think it could kind of give you a better insight into what their sweet spot is. But I'd probably say a $4 to $6 million valuation range is probably a typical sweet spot. And then companies that are probably in the market, even if they're a little early with revenues, but they have a little traction, a little validation behind their product or service.
What does that mean, a little revenue? What do you mean by that?
Yeah, so early revenues, obviously, again, that looks different from each model. Now, we do have a lot of health tech that comes at us that is going to be pre-revenue for a long time. If they're trying to get through FDA approvals, it's going to be a long path. So those are going to be pre-revenues, and sometimes they're expecting to sell before they even hit revenues. But for some of the companies, we like to see at least some traction. And so revenues can give us some validation behind their product and or service. So it's more so on that traction side.
So then define traction.
Yeah, so we want to see customer feedback. We want to see good feedback. We want to see people converting from those pilots to actually paying customers. If you have a freemium model, we want to see that, yes, the service works and they love it when it's free, but are they actually going to convert into those paying customers?
All right, last one, Tim. So the person who's hearing all this, I think my company is great. I have a great idea. I have some traction in those things. But they don't seem to get past the next steps in any angel groups, whether it's 757 angel group or not. They're in a tech company, maybe they participate in Start Peninsula, something like that. What is typically missing from a company? I know it's a very open-ended question, a very broad question, but like what's typically missing in something like that from a company who thinks they check off everything on your list, but don't actually ever get close to that next step with you guys?
Right. Obviously, that is open-ended and it looks different for each company. I think the biggest thing I could probably provide for them would be advice to maybe sit down with someone who's doing due diligence and kind of see where those pain points may be for that specific company. It might just be that, they have some issues with the team or they have some issues with the model. They don't believe it's scalable, or they just don't believe that, they're able to address the issues that they see. But I think even within the ACA, there's amazing opportunities to understand what due diligence looks like from Angel's side, and then be able to position your company to answer all of those questions. Because if an angel investor has no questions, I think that's a better site for the company and as a whole. Because if they're asking a ton of questions, I pretty much guarantee that, because of all those questions and concerns that the angel may have, it's probably not going to translate well into funding. If there's a small number of questions and if the angels are pretty confident in those answers, then I see the funding is going to look a lot better for those companies.
Tim?
Yeah, so you mentioned 3 companies move forward when,
Yes.
And how many times a year do you feature 3 companies?
Yeah, so we have 3 cycles. We're right now in the middle of a cycle. I'm probably going to butcher the dates, but I know we have one cycle within the first, maybe March 17th, I think is our first cycle, our first membership meeting. And then we have one around April, May, and then one in November.
Awesome. So with that, how has... because before you would have, correct me if I'm wrong, there would be a dinner, there would be like at the Westin or something like that the companies would pitch. How has COVID changed everything, and how do you do everything now? And what has been the impact of COVID?
Right. Sadly, I actually wasn't able to be a part of those dinners yet because I jumped on the team during pandemic. I heard they were amazing and a lot of fun, so I'm excited to be a part of them when it opens back up. But pandemic has hit our group. We're not unique in that. I'm unsure if any angel group has actually been unhit by pandemic. And if you look at the data, I think angel groups have pulled back on financing this 2020. However, in 2019, I think we put out 14 million in financing, and in 2020 it was around 12.5. So we were hit, but we weren't hit to a large extent to what other angel groups have seen. So I was kind of, excited about that. I do know that a good majority of that money was follow on. And the reason I think that is just, during the pandemic concerns, new investing is going to look a lot riskier, and the companies that they're already in, they want to protect. So if they need follow on financing this year, they're going to reach out and provide that for their portfolio companies.
I've been directly involved within our entrepreneurial community for years. And the most common question I get is, Tim, I want to get involved, but I don't know what events I should attend. Well, StartWheel eliminates that pain point because we consolidate all the events you should attend into a single calendar. Now you'll be in the know and see where to spend your time. Gone is the need to search multiple websites and calendars. Just head to startwheel.org and see for yourself. That's startwheel.org.
Tim, is that the first voiceover you've ever done?
The debut, man. World premiere.
Wow. Oh, that was fun. Okay, so I've always said that if someone is looking at getting investment for their company, the best thing to do is to ask the person in charge or someone involved in that company, like make friends with that person. I think that's always a great thing to do. So whether you're applying for a job, whether you're looking, for investment, anytime you have unknowns or you want to have this other result happen, I think befriending someone is a great thing. How often do people actually do that though? Because I feel like a lot of people would just say, and I feel like a lot of people I've told to do that, that's their kind of answer. And I'm just like, well, why wouldn't they try to help you more if they like you? So why don't you do that? And from my very small sample size, it seems like a lot of people don't end up taking advice like that. Have you seen that in the last year where people actually like try to get advice from you guys instead of just doing nothing?
Yeah. So I think the cool part about what we do is we sit down with all of these companies that apply each cycle. Even if we look at their guest profile and they seem early, we're still going to sit down with them for 90 minutes and talk through everything. And so I think we build those relationships early on. A lot of companies apply multiple times, and those discussions early on really help us track that progress. So we actually encourage people to reach out to us. And we love talking, even if it's, they're not applying to the rounds, but they just want to email me or talk to me and just kind of get some advice, maybe grab a cup of coffee, we're 6 feet apart. But just get some advice and see, how they can best position themselves to be a part of our group and maybe get to that top 3 spots.
Who pays for the coffee?
Oh, me, of course. That's on me.
Really?
Yeah.
Really interesting. I would want it to be the other way around, that the person is showing initiative to pay for something like that.
Yeah. So my grandfather, raised me pretty well on the side of buying meals. He always slid his credit card to the waiter before food even came. And everyone was always surprised. And so I follow in line with, how he raised me.
So if someone tried sliding their credit card first or paying for you, are you going to say no, or what's the situation like there?
No, I always appreciate it. But I hate multiple checks, no matter where I am. So if, I always pick it up, and, if someone wants to pick it up next time, I'm always happy for them too. But I'm never, afraid of buying a cup of coffee for someone.
What's your favorite coffee place in town?
Yeah, so it kind of differs. I like to hit everything. 3 Ships is really fun, but they have no inside right now. So Stella has been my go-to spot to get some work done. I really like the vibe and the culture over there.
Stella Ghent or Stella Downtown?
Stella Ghent.
Interesting. Do you get the cold brew, like the long drip, or what do you drink there?
Always a hot cup of black coffee.
Black coffee, that's the best way to do it. The one feature of StreamYard that I don't like is this Facebook piece where they don't tell us who said this, but Facebook user says, why should someone approach an investor versus reaching out to a bank? Also, this might be a great time to say, if you have a kind of traditional retail shop, or like there are certain businesses that typically don't get type of investment. And so if you were opening a coffee shop, that's probably not the type of business that 757 Angels is going to invest in. But that being said, why should someone approach you guys or any kind of investor versus just going to a bank?
Yeah, so obviously as an angel investor, we're looking for an exit, which is what you're saying. Obviously, if it's a lifestyle business and a coffee shop and you just kind of want to do this for the rest of your life, awesome. Like, the model can work and you can make a bunch of money doing it. However, for angel investing, it doesn't look that attractive, because if you're not selling the business or exiting in some type of way, we don't really make money. So I think it comes down to sharing the risk, obviously. So with the banks, obviously you're taking on debt. You're, taking all of that risk. With angel investors, we're taking some of the risk. We obviously appreciate the upside and are looking for business to exit.
Is the model still invest in a lot and then hope that one of them becomes a unicorn?
Yeah, I think that's the model for a ton of people. So for me specifically, I don't think that's going to be my model. Obviously in my position for the Angels, I'm just more of an investment curator. And so I think we see a lot of angels throwing money at a lot of companies. We do have a lot of really active angels, and that may be their model. They might just be looking at, what materials we provide and not necessarily doing as more like a more deep dive diligence on their own. However, that model can work. It's worked on the West Coast a ton. You see a lot of people throwing a lot of money at a lot of different companies, and a bunch of them fail, but they hit big. I'm looking for, solid returns, but also I love the deep dive diligence, and I love investing in founders that I just, fit with. So I think it just looks different.
Yeah, and that's one of the things that I find so interesting. Being involved with the startup community here for the last 9 years, it's always so frustrating to me when I hear people say, "Oh man, there's no money available. This place there's no ecosystem. I'm going to go ahead. I'm moving to the Valley. I'm moving to Boston or Austin." And it's like, folks, this is like the largest small town community that you can find. And with 757 Angels investing more than $70 million in 28 companies, that's $2.5 million per company. Obviously, the math is different than that, but when it comes down to it, it's like, folks, if you can't make it in Hampton Roads, what makes you think that you're going to be able to go into a big ocean like the Valley and then get your yeses there? What's your take on that? What do you tell founders that it's like you got to be solving the right problem, or reframe, regroup, pivot? What have you found since you've been sitting at the table with 757 Angels?
Yeah, obviously, I think pivots are healthy depending on where you're at. But if it's strictly just looking for financing and you feel like you're in a good position, but there's just no doors being opened here, I would say reach out, because, even for the founders that might be off in terms of timing, even though I love the company, I love the model, I love the team. Obviously, we only have 3 spots for 3 different cycles. And so getting to one of those top spots can be extremely competitive. However, we're very, very founder friendly. So we offer as many resources as we can in terms of, what other grants or what other groups are out there that they could apply for. And we have connections with those as well. So we love introducing them to those. We also have the 757 Accelerator that can definitely help them hit some other benchmarks and or help them with that pivot. And the startup studios where we offer 6 months free rent that's going to be opening in April. I'm actually a part of the initial pre-screening process of that. And so we'll be pre-screening companies and offering them there's 15 spots, I believe, open in that studio office, where we're building a density and a lot of creatives in that office, and mentorship and opportunities to be in front of even the Navy, which is going to be there, which are going to be, looking for companies that actually help them. They might be a customer, so they might be helping them with, getting off the ground and being able to provide services for them.
So we talk about diverse portfolios. I think a lot of people would agree that a diverse portfolio is something that's valuable. It sounds like the 757 Angels network ecosystem is trying to enhance their portfolio and have different pieces at their table, so that at the end, which I think is 757 Angels, they have been working with these groups for a long period of time. So is it just above 757 Angels is Accelerate, and then the studios is above that? Is kind of how if it was a sales funnel, it would go through, or am I missing something on that?
So we're all separate, but under like the same umbrella as a whole. So we all collaborate with each other, and often, like the startup studios, I am one of the pre-screeners, as well as Ian, who's with the 757 Accelerate. And then it goes down to a selection, a committee that is actually of a lot of different people that are just a part of the ecosystem in the community. And so I think that's going to be 5 to 6 people, but that are not actually internal for the selection committee. So I think we all collaborate with each other. but obviously are our own thing at the same time.
Yeah, I mean, it just seems like the co-working space in general, it seems like there is so much of it right now and so many vacancies. How is and adding value is something that's really, really important. How is the application process now? I mean, what kind of companies are you getting the companies applying that you're looking for? It just seems like anybody that has an open office right now is like advertising their space to use.
Yeah. So I'm not sure how the other ones work, but obviously I think the free rent, where we're not taking any equity or anything like that, is definitely a pro. And so I think the value add would be the proximity to resources. You know, the angels are going to be located in the office. So if you want to talk to us about timing, positioning for your company in terms of being able to be ready for that investing from the group, we would love to talk to you. There is Tech Bridge, which is a naval side to it, that's going to be located in that office as well as the 757 Accelerate. And then you have the entirety of Assembly, which they're gathering a bunch of creatives and amazing companies in that office. So I think the density and being able to offer that mentorship and that help within the office gives us a unique value add. And I think the other offices like Gather, I think they're amazing. So it's not to take anything away from them, but I think we do add that unique value add to the startups specifically.
For sure. How much space does Startup Studios have and Assembly have in terms of like total square footage, or how many offices are available?
In terms of ours specifically?
Yeah, I just and I don't mean to put you on the spot if you don't know.
1.7 thousand square feet.
Exactly. So it's a giant area where we're going to be co-working. So there's long desks, and obviously because of pandemic concerns, we had to take a few positions away to separate, for health concerns. But I think there's going to be 15 spots open, as well as there's going to be 2 specific offices, one for Tech Bridge, which is the Navy side, and then one that's shared between the Accelerator and Angels.
So my observation of co-working in this area is very different than co-working in other areas, where I think in other areas, the long, crazy tables, people coding away works. However, here, co-working is really just office with a door. And I think that the actual co-working stuff that you just talked about seems to, and maybe it's changed, well, not since COVID, because no one's been there, but it seems like that model doesn't work here. It seems like people don't sit at tables. They don't work like that. It's very distraction heavy. And the thing that does work is going in and going into an office and actually working in that way. So what are you guys going with that as my research and me seeing that firsthand, and a guy who's basically ran a co-working space too in Hatch, like, I don't think that model works. So what are you guys going to be doing differently that actually gets that model to work?
Right. So obviously we have full access to the building amenities, which has a rooftop bar and lounge space. They can work on their own if they so choose. However, being in that office, I think that density is going to be key. And I think just obviously I was on the West Coast with Uber, but those long desks actually, helped us a ton in terms of collaborating and working together. And so I think that's our goal, is in terms of getting these companies to kind of collaborate and vibe off each other and to just, encourage each other and be there, because being a founder is really difficult. So I think being able to do it together kind of as a team is going to be helpful. Now, I think if that becomes an issue and if we need to pivot in the way we structure or model our office, we will. But I'm really excited to see if this works, because I think we have a unique value offering, and I'm excited to be in the office and be right there in the middle of that co-working space myself.
So sorry, Tim, how does someone deal with the distractions that are that long table, though? The knocking on the door effect of every 2 seconds of, hey, here you are doing this thing. Because I feel like that's why people like to go behind the doors at all the co-working spaces in the area. You don't see a lot of work being done from there. And so you're saying that collaboration is what's going to be valuable. But what I've seen is that collaboration is what brings people behind that door, because they actually have to get work done, because they have milestones and they need to make money and food under the table and things like that. So it'll be very interesting to see how that works with you guys, because I feel like that is what's brought people into wanting that closed door office.
Yeah, I definitely saw myself at the Uber office, although we had those long desks, often, going up to one of the couch rooms or one of the speakeasy rooms to kind of get a quieter space to do a little bit of work. But we do offer, the building does have private conference rooms. It does have private rooms that you'll have access to as well. However, we think that the community aspect of it, being able to, work together and vibe off each other, and I think that is going to be a huge value add currently. Obviously, talk to me in 6 to 9 months, and we'll kind of see where I'm at, positioned then. But I'm really bullish on the idea. I'm really excited about trying it and seeing how it works. But again, talk to me in 9 months, and
I can't wait to bring it back. Tim?
I'm curious in terms of the selection.
Yeah.
What's more important? Is it going to be having that diversity in terms of portfolio of companies, or is it going to be trying to find companies that are have the potential to scale and grow and become investable? I mean, has that been discussed, and what are you guys looking for?
Yeah, so we've built out a model to kind of get a lot of different takes among community members and different aspects of the ecosystem here to be able to select those companies. I think for me specifically, it's going to be finding founders that are super passionate and understand what they're trying to do. However, we're looking for early stage companies, and so one of the companies I was talking to has a beautiful wireframe, understands what he's trying to target, hasn't got it fully coded, but it's bringing excitement to me that he's a potential, add to the startup studios. So we are looking for people that are early, and being inclusive and diverse is obviously, on our radar. We're very focused on that in terms of, replicating, what we feel Hampton Roads is all about, because this is about being a part of the community that we live in. And we are a very diverse and inclusive community. So that is definitely going to be a part of it. And I think that's where we're going to have the value add from a large selection committee as well as a strong pre-screening team.
Are you stuck at your home office, socially distanced coffee shop, or your fancy all bricked out corner office, wondering why no one can see your business and sales are all over the place? Sounds like you need a pro. That's why I developed the Anomaly Academy. Insert clever copy here. Oh, I guess I was supposed to put something else there. Oops. You can grab access to the Anomaly Academy now at zackmillersays.com/Anomaly Academy.
Man, is that two world premieres in one show?
Oh yeah, there it is. Just like you, I'd also had that audio recorded for a while, and I was like, I was like, what, we're just gonna do this, and so we did it.
Yeah, it's a learning thing for sure. And just
how many takes did it take you to record that?
No, maybe one or two.
Okay, because you sent me 37. I had to piece all that together.
Yeah,
so why?
Right. One word at a time. I wanted to see what kind of editing skills you had.
Well, it was job well done on my part.
Clearly, both of mine were 37.3.
Daniel, so this is a true story. So he sends me, I told him I would edit it. So he sends me the files. And before I listen, I'm like, yeah, you sent me the same file twice. They both were 37.3 seconds. Exactly.
But different.
I was like, dude, that's so ridiculous. How did you do that? Maybe he did it on purpose.
Yeah,
see if I would catch
it if I tried. But the point of that, though, is it really comes back to the whole startup thing. Is that you've got to, as uncomfortable it was for me, doing that for the first time. Founders have to continue to do that. They have to continue to put themselves out there, and so encourage everybody to listen. Reach out to Daniel, and he's there to help founders grow and succeed. Whether if you need space, you're looking for capital, whatever the case is. So many folks, it's like.
They complain about how they can't get anything, and then they're not even willing to Nike it, right? Just do it, right?
Just do it.
It's the greatest slogan ever. It's not even a question. It's like, Just do it. Well, I think I'd rather complain about how this company never gave me money, even though I never even applied or reached out to them. I just thought that they would magically, through osmosis, send me, wire me or Venmo me some money. But I don't know why it didn't happen.
Yeah. I mean, to that end, I'm curious how many, if any at all, how many companies that 757 Angels has passed on, of those companies that were passed, how many people actually provide you with monthly or quarterly updates on their status?
Or annually.
I mean, every company that I work with, and I work with a lot, I tell them all, take an inventory of all the investors that you have talked to. Take an inventory of all the questions that they ask you. And when you have repetitive questions that come up time and time and time again, those are things that you need to focus on. And then come up with a monthly newsletter you send to all these investors and tell them what your progress has been, what your challenges are, and how they can help you. And nobody does it. I mean, it's just, and with all these investors, it's not a matter of no.
Do people do it? I mean, have you seen it, Daniel?
So I haven't actually seen that, but I've only been a part of 2 cycles now.
It doesn't matter. It's not going to happen.
Yeah.
Yeah. It's what I call like mirror syndrome, basically, where people are like, I don't want to admit what's going on. I don't want to admit it.
Yeah.
I don't want to admit that I don't know that answer, and I'm not willing to work on it.
You talk about an opportunity lost. You have 130 angel investors in 757 Angels, and if a monthly newsletter went out, these are 130 people that want their money to work for them. Right. They want to help a business succeed, and you're talking about an opportunity missed by just, hey, this is where I need help with, and it would be amazing the strength of the audience that they would have if they would.
But think about from a Start Peninsula perspective, Daniel, you are a judge of that. Like how many people there or again, thinking about doing that, but weren't willing to spend the $50 to get in, right? Because $50 is so much with a business. Or number 2 is I don't want to pitch my business because it's a secret, or I don't want to pitch my business because I'm too afraid to do that. Well, by the way, all 3 of those things are going to be pretty freaking necessary for you to do. Get off the whole this is my idea stage. Like, don't watch the Facebook movie. Like that's like, it's just, but that you have like mirror syndrome where people are like, it's absurd.
So we actually had one of those companies that when I did guest judge, one of those companies did pitch to us, I think 2 months prior. And actually at their, startup pitch competition pitch, it was way better. And so I love seeing that. We do have companies, even though they don't send newsletters to us, they do apply multiple cycles in a row. We do ask that they've had progress or hit another benchmark. And so I think that's where we get to see the progress happen. And we do have companies that, maybe on their 3rd, 4th time actually do make it to the top 3, which is really interesting. And we love seeing that.
How would you establish milestones or benchmarks in that case? Like, how, if a company is listening and they're like, oh, what's a benchmark? What's a milestone that I could do as a business? What's an example of something that they could do to kind of make their own little checklist off of the show?
Right. So some of the most common ones, throughout our pre-screening call, we do ask if they want some feedback in terms of, our biggest concerns and what we think they could address to possibly, make it further if they don't make it all the way this time. And so we do address those specific concerns, and then we kind of look back at those. But one of the most common ones is going to be traction. So some of them come to us with great customer discovery, but then haven't really released their beta or alpha, and haven't really seen any conversion rate or any feedback from that. And so that's one of the biggest ones, is we really need to see some sort of validation and or traction from your product or service.
Yeah, on the flip side, I'm curious, do you all require periodic updates from the companies you invest in?
Yeah, so we send out a code of conduct or rules of conduct, which is really just expectations from the companies. One of those is being, it's a long process and we have a lot of really active members. So if you're a company that has already, almost filled your round and you expect to fill your round before you make it to the membership meeting, it's not going to be a valuable opportunity to our group. So let us know prior to, the board members getting involved and spending their free time on due diligence, because dropping out at the last second is not great for our members and or for the companies that you kind of took a spot from. And then, reaching it back out to number 4 at that time, they might not necessarily be prepared. So that's one of those that we addressed there. And also, what was this question specifically?
Yeah, just if
reaching back out.
You invest in a company, are they obligated to provide periodic status updates to the investors?
So that's also outlined in the code of conduct in terms of that investor feedback and or providing monthly, quarterly reports, something to that extent. And we have an investor portal, as well as I created this new Airtable where I provide all of the investor information and send it over to them. So yeah, that is outlined in our code of conduct.
I was Boy Scout, be prepared is what I heard out of that. Is just have that crap ready. All right, so I keep hearing I keep hearing you talk about business models from people. How do these businesses that you guys are associated with make money? Because I'm not hearing ways that you guys are making money off of it.
How are the businesses making money? Or
no, so like 757 Angels, how is it making money? Startup Studios, the free space, all this stuff. How are you guys making money? How are you telling everyone else make money and do all these things and traction, stuff like that? But how does 757 Angels and the other associated businesses make money?
Right. So we are a nonprofit. So we do get funding from the state. We get grant funding, as well as we have membership dues. So 130 plus members, obviously you can, see that with the larger number of members, more membership dues offers more opportunity for us to be able to offer more investment curation, really be able to reach out to the companies, provide different assets, as well as like LLCs. So some of our angels can only invest, say, $10,000 a round. And, if the minimum investment required for that round for that company is $50K, that cancels out a lot of the angels. So we offer LLCs as a unique value offering, and we group all of those angels together into an LLC that can invest into the company. So that's another unique way that we try to provide access to capital for the companies as well as for angels. But yeah, we do have membership fees, Startup Studios and 757 Accelerator. We're all running off of, fees and or sponsorships from different companies locally. A lot of companies really want to be involved in growing the ecosystem and the businesses and the startups around here. I think there's a lot of capital within Hampton Roads that wants to be focused on this. And we're just trying to open that access up.
The Fervent 4 is powered by the Small Business Development Center, which helps local small businesses grow through counseling. If you're interested in learning more on how the SBDC can help your business, head to startwheel.org/weekly.
I was working on my monotone voice at that point. Hello, everybody. Welcome.
Commercials.
Tim, you got something off of what he just said? Or no?
No, I don't.
Okay. So 2021 to me, 2020, COVID, all that stuff was really the acceleration of things that were going to happen in 5 to 7 years. I still believe that to be the case. Because of that, are there different types of companies that you are now seeing in your portfolio that are coming through from a Gust application or anything like that that you weren't expecting to see that is now coming in that you're like, oh, that's going to be the business of the future and we need to be in that? Or are you still kind of seeing the same style of businesses?
So in terms of last cycle, I've only been a part of it during the pandemic. So I think I've seen specifically companies that were either starting during the pandemic or hurting during the pandemic, which I don't think is unique to any specific industry. I think I'm super bullish and would love to see some cannabis related companies reach out, but I haven't seen that, which is kind of upsetting. Maybe with the new administration, I will. But yeah, I'm looking for those companies. Just personally, I would love to talk to some of those companies. I grew up and went to FC First Colonial and knew some of the kids that I actually graduated that year started a company out in Denver, I believe, called Mass that went public. So I guess you guys might know of them or their name.
Zack is, you're talking about Mass Roots.
Twice in one day. I invested. We had invested in them for a different company, which I can't think of what it was. It was RoboSense. It was RoboSense, so like Isaac and all those guys. Yeah.
Isaac Dietrich.
And so Yeah, the whole thing happened while they were in Hatch. So it's
I graduated with those guys from First Colonial.
Yeah.
And so I wasn't super close with any of them, but it was exciting.
Tyler and Isaac and
Hyler. So 8 years ago, whatever, when it went public, I don't know the exact date. I started investing into it just because I was excited to see friends that, you know, brought a company public. It was super exciting.
It's interesting that you brought that up, because at the time maybe things have changed, but that business was very severely frowned upon in this area at every level.
Right.
And so I believe every type of service provider that they could have basically was like, we don't want anything to be a part of this. A lot of it would be interesting, because I bet a lot of people this is definitely an assumption, a lot of people that are in your angel group network are probably ones that would frown upon that type of thing then. So it'd be interesting to see where that is now, because they were a $100 million business at one point. I don't know what they are now from a publicly trading perspective, but they were like the first publicly traded pot related business.
Something like that.
Yeah. And it'll be, on the same token, it'll be interesting to see if cannabis businesses are supported now, to see if there's been a cultural change just in the last 5 to 6 years.
Yeah. So obviously, you know, living in LA, I don't have the same beliefs necessarily as everyone in Hampton Roads, and I can't speak for each member of the group. However, I think our group does reflect the culture as a whole with Hampton Roads. And I would say Hampton Roads probably hasn't gotten 100% on board, but I think we're slowly moving in that direction. And I mean, I'm the associate director, investment curator. I love the idea, so I would love to talk to the companies. Now, I bring it to the board. The board has the final decision on top 5 and top 3 moving forward. So it's completely up to them, but I have no problem presenting and recommending a cannabis-related company.
What about gambling-related businesses? Gambling is now legal in Virginia in some aspects, and sports betting is, I think you have the DraftKings app and stuff like that now available in Virginia. Do you anticipate anything like that coming through, or have you seen anything like that come through?
I haven't seen anything like that coming through. I haven't even really thought about the anticipation behind it.
Because if I remember correctly, it was only in a handful of states, and now I think Virginia's one, Michigan's one. All you have to do is watch El Presidente to see where he is. That's what's that's Barstool Sports founder. Yeah. By the way, talk about a hustler. Dude turned eating pizza and ranking it into like a $100 million business. I mean, it's absurd. Oh, I don't want to do this, but this man's eating pizza.
Yeah.
It's
every day.
Mad respect for that guy. Yeah.
It's interesting because I received a piece of mail just yesterday from DraftKings. So it's like, man, it was approved. They had that stuff printed and ready to be mailed as soon as everything changed. So, I mean, that's the hustle that you need and that these founders need to grasp and understand.
I don't know who sent this, but will angel investor, I guess that's you, Daniel, help people who post podcasts with mic issues such as muting themselves?
I don't know. That might be too rookie of a move for us.
Yeah. I was. Yeah. You know what? Whatever. I make mistakes. It's fine. Tim?
Now, what have we not talked about that you wanted to talk about?
Oh, man, that is a good question that I was not prepared for. Yeah, I think we covered a lot. I think the excitement just around the startup ecosystem here is something that I'm very bullish on and very excited to be a part of. I know I'm the youngest member, part of 757 Angels. And I have been constantly getting LinkedIn invites and, you know, being reached out to by other members moving home from San Francisco, SF, moving home from LA, moving home from New York City, starting their own businesses and or, you know, having funds out there, like a small VC fund, and they're moving home and want to be a part of the ecosystem. So I think there is an attractive time, even though, you know, pandemic hurt us. I think it's an attractive time to see these other cities that aren't hotspots in terms of ecosystems booming. And so I'm really excited to be a part of it. And I would encourage other people to get into this ecosystem and be a part of it in any way they can. We offer mentorship opportunities. If you have some expertise in some area and want to help some people, let us know. If you're looking for capital, or if you want advice, please let me know. Reach out to me. I love people randomly reaching out to me, even if you just are talking about an idea you have, and I can maybe help, guide you in terms of the next step and creating that next company that you really want to do and get out of that 9 to 5.
So I think 10 years ago, the answer was Silicon Valley. I think maybe now the answer is Austin. And you kind of talked about Austin, but why should a company not go to a place like that and stay to a place like this that isn't as, it still isn't as active as those places, still isn't as known as those places? Like, what makes this area attractive? What makes the 757, the Norfolk, Virginia Beach region, attractive for someone who wants to start a business, to grow a business, and to see it hit those exits that you're seeing from those other areas? Like why should someone stay in this area or move to this area to see their startup hit the mega milestones that everyone wants, that everyone talks about?
Yeah. So to be honest, when I first moved back, my first idea was move to Austin because I thought it was a great city. And, I still think it's an amazing city offering amazing opportunities. So I wouldn't say don't move there. I would say Hampton Roads offers a lot of hungry people to get involved in startup community. We have talent here. It's not as great as Austin, but the competition out there is insane. The lifestyle is insane in terms of cost of living. When you're here in Hampton Roads, you can really start from a small business. It's a lot more affordable, and we have a lot of hungry talent, hungry people, mentors in terms of reaching out, in terms of capital, access to capital. We have people who want to do this and want to help. And so I just think it's an amazing opportunity to be a part of that now, especially during pandemic, being in a smaller city, being in somewhere that you can actually afford and you don't have to struggle your way through it in terms of standard of living, in terms of finding that talent. There are people here that want to help you, and just reach out. Let's just get involved. I don't think you need to move to an Austin anymore, which maybe 8 years ago you needed to, or else this company was just going to fail in 3 years.
Is there a reason that changed? It's just the internet's better, bandwidth is better. Like, what's the reason behind that?
Yeah, I think it's the density. I think it's the focus. I don't know if it's necessarily that the internet is better. But yeah, I think it's just density of in terms of talent, in terms of access to capital. And maybe it was just, people were around willing to give you capital, but the density or the awareness wasn't there. I know the awareness wasn't there for me, and I definitely had to search it even when I came back. But I think if you're looking for it now, it's a lot easier to spot.
There it is. Any last thoughts, Tim?
No, I mean, hats off to you, Daniel, and to everyone within the ecosystem on what they're doing. It is really nice to see momentum moving forward. Density has always been a big challenge in this area. So to see things joining and consolidating and everybody working together, it's a nice thing. So as you know, I stand by you all, and however I can help you guys and help the region as a whole succeed, yeah, I'm there. So thanks for joining us and for sharing your insight.
Sing that song, I Stand By You.
It's about building a community, man. It's not about building an empire.
There we go. Yeah. Daniel, appreciate it. It's been great. Until next time, we'll see you guys soon. Peace.
Thank you.
And pancakes.